Such a great day. I'm super excited. I will be jumping up and down right now, but I am currently strapped to my microphone because I don't have my Blue Yeti set up because I haven't done a stream in a long time. So imagine me jumping up and down because that's how excited I am. SoFi is a real bank. They're becoming a real bank, and it's extremely exciting. And if you are here, you too are excited. I was just talking to my patrons in Discord about my strategy for escaping and surviving this bloody market because I'm taking extreme risk and it's coming back to bite me right now. So I'm trying to figure out how to get out of this. And then one of my patrons, Abby, announces in our Discord channel that SoFi received the National Bank Charter approval from the OCC, the Office of the Comptroller of the Currency, saying that SoFi can go forward with its acquisition of Golden Pacific National Bank. They announced last year they were going to buy Golden Pacific in March of 2021. And we've all been waiting for this since fall or the winter of 2020 because they originally filed for a actual bank charter for themselves. But then they went forward and said, okay, fine, we'll just go and buy a bank so that we can make this faster. So they went out and they bought Golden Pacific. So now they had to wait for the OCC to say, okay, you can go forward and complete that merger and become an actual national bank. And that's what we've been waiting for. And it's finally here. It's a huge deal. And we're going to talk about all of that tonight. So thank you all for being here. I know I took a little bit of setup, but for good reason, because there's lots to talk about and to explain exactly why this is exciting. I'm stumbling over my words because I'm super excited. Let me just show you real quick what's going on here. The OCC has brought some amazing news to us tonight. And I can't hold my excitement back because SoFi is my largest position by far. At least 50%. It just went up tonight as soon as the news dropped because I was planning out my next move for tomorrow to get out of this mess. But then this news dropped and I went straight to the market. It went up 10% immediately, right? 14%. So I bought some more before that happened, right? Right as that was happening, I got in before, still under 13. Now it's up to like 14. Let me just show you this graph, robinhood.com/SoFi. And we can see SoFi stock. Look at this. It was trading this last week. It's been going down, right? And we've seen it down 27%, right? And then just today, just tonight, like an hour ago, the news drops. It was at 12 and it just shoots up to 14. That's how excited investors are and have been about this news. And we finally got it. And so we see Anthony Noto here saying he's very proud of SoFi's team for this major company milestone. SoFi is officially a national bank. They got the bank charter. You read that right. We're becoming a bank. In the coming weeks, we have a lot of exciting updates to continue helping more people get their money right. SoFi has been doing this for the longest time. They continue to say, everyone says that they are building the one-stop shop online bank to help people get their money right and do mortgages and do personal loans and just savings and whatnot. But SoFi is the only one who actually does it. That's why I am so bullish about this company. And Anthony Noto is an extremely admirable leader, right? He came in. I've done a whole documentary on SoFi. I've covered SoFi so many times. We've done documentaries on SoFi, and we've covered the whole story of SoFi. So if you haven't seen that, you got to go watch our videos. And let me just give you a little bit of a backstory before we get into the numbers of this deal, of this major news about SoFi's future. And you can see here, we've covered SoFi for all of last year since the SPAC IPOE dropped from Chamath Palihapitiya's social capital. And you can see we've talked about where SoFi is going to be in 2025. I said 3x by 2025 from last year, but of course it can go much higher than that. That's just a conservative estimate, at least 3x from last year when it was at like, I think $20 per share. So I believe that SoFi is going to be at $55 by 2025. That's conservative, of course. Given this, that was before the bank charter, but with this bank charter, it's going to be even more upside for this company. And we've talked about how people are trying to acquire them, thinking about acquiring them. Morgan Stanley, Goldman Sachs, all those people could acquire SoFi. I don't want that to happen, but they could, right? At least they could have before this news dropped. Now SoFi is a national bank on its own. It's a huge deal. They don't need a Morgan Stanley or Goldman Sachs to come acquire them, right? We can grow on our own. This is a growth stock. We have the opportunity to buy into this stock at $12, $13. Before, when the SPAC launched, it was $10 and $20 right before it runs up. And those who got in before the news have been able to acquire so many shares of this company. Like myself, I have thousands upon thousands of shares of SoFi because I've been buying it since the SPAC, and that's the value of SPACs. So I've covered SoFi Galileo, right? We haven't even talked about Galileo yet. Galileo is the other big news, the other big part of SoFi that people don't talk about often, but it's huge, right? And I've covered that. You have to go watch this video. And talking about SoFi's history, right? How SoFi almost failed, right? All the scandal, where they came from. And then how Anthony Noto came in out of nowhere from Twitter and turned this company around and then applied for the bank charter. And then I've talked about how the Fed's interest rates and inflation, all of that is going to affect SoFi, and not so much in my opinion. But then we talked about the SoFi Bank charter, breaking down into all the numbers of it. I'm going to go through these same numbers here tonight, but you should go watch a video after this live stream to get even deeper understanding of how important this deal is for SoFi, this bank charter. The OCC conditionally approved SoFi Bank National Association. I was waiting to do this video until it was not just a conditional, but definitive. And then when I saw this tweet from SoFi, I said, okay, they say it's official. That means it's official. It's not just conditional. Conditional is just the legalese term for it, but it's definitive. We have the charter. We have the National Bank Charter. This is great, right? So the Office of the Comptroller of the Currency, OCC, today conditionally approved applications for social finance, SoFi, to create SoFi Bank National Association, SoFi Bank NA, as a full-service national bank headquartered in Cottonwood Heights, Utah. That's where Golden Pacific Bank is. And so since they're acquiring them, that's where they're going to have their bank headquarters, right? There is a bank holding company. That's what SoFi is. They're not banking themselves. They're going to hold a bank, which means that they are effectively a bank and can act as such and will be regulated by the OCC and the SEC and the Federal Reserve and all those other parties. The FDIC, which means that they have a full protection for their members, their customers, from the FDIC, like any other bank. So they're saying here, as part of the transaction, SoFi Bank National Association will acquire Golden Pacific Bank National Association, a national bank insured by the Federal Deposit Insurance Corporation. That's what I just explained to you. Upon consummation of this transaction, SoFi Bank will have $5.3 billion in total assets. That's a lot of money. And in total assets, $718 million in capital at the end of the first year of operation. So by the end of this year, or by the end of whatever first year, they will have that much capital and assets. They're saying they will have loan offerings and deposit products previously offered by Golden Pacific. The bank will also provide a fully digital, mobile-first national lending platform for consumers across the country. Lending is currently their biggest unit of their business. They can retain all of those margins on their products when they lend out money. Before, they had to pay the middleman. They had to pay some other bank to originate those loans. But now SoFi doesn't have to pay that other person. And they also don't have to have their customers dealing with another lender. They have full control. They keep all of their profits. That means bigger bottom lines for the company and for the shareholders, you and I, right? That's the excitement here. So, and we'll walk through those numbers, exactly what that means going forward for SoFi. So then SoFi says, today's decision brings SoFi a large fintech inside the federal bank regulatory perimeter, where it will be subject to comprehensive supervision and full panoply of bank regulations. Obviously, I'm not the best reader, but you're going to have to forgive me for that. Including the Community Investment Act. I've read through all of that. The Community Reinvestment Act is just a thing that banks do to make sure they're investing in their communities. So in this case, it'll be Utah, making sure that they're keeping up with the community, helping our community develop. That's just part of the whole banking system And it's great that they do that. So this levels the playing field and will ensure that SoFi's deposit and lending activities are conducted safely and soundly, including limiting the bank's ability to engage in crypto asset activities. So now they of course, they will limit their ability to engage in crypto because crypto is extremely volatile and risky. So they can still engage in it, but just not as much as someone like Robinhood, who is not a real bank. Neither is Webull, neither is Upstart, right? SoFi, among its competitors, is one of the only bank charter out there. There's Lending Club, which is a competitor on the lending unit, but now SoFi can actually compete with greater margins, and they can do a lot more. Yeah, they have the approval, which we've all been waiting for. And now let me just walk you through real quick the actual numbers of this deal, why this matters so much. And let me just pull up SoFi investor presentation so we can look at the graphs, and then I'll go through and actually walk through the numbers for you so you understand. We know how SoFi makes money, right? SoFi, what they do there, as any other online bank, they acquire lots of members, and by offering them free services, free and cheap services. So saving your money, getting a checking account, getting a credit card, and investing on the stock market, all these free things. So they get you in the door, and then once you're in the door, they offer you up, they upsell you on the other products like lending, right? Home mortgage, personal loans, car loan, refinancing, student loan refinancing, all these other things, so that you can start paying them money, right? And then once you use them and you like what they're doing, you tell your friends about it, right? And it's a flywheel. They keep doing the same thing over and over again. And the beauty of this is that over time, their revenues become cheaper because they acquire so many members. When they want to sell them on a loan product or any of the other paid products, they don't have to go out there and find that customer. The customer is already in their app. They can just say, hey, here's a notification. Do you want a home mortgage? We see you have all this money sitting there. How about you buy a home so you can invest your money and actually build wealth? How about you get a personal loan so you can pay for school, or a student loan and so forth, right? How about you refinance your student loan so that you can save more on your interest rates? And because SoFi is now a real bank, they can offer better interest rates to their customers, which means that their customers will be happier with them, which means that they will stay with them longer and buy more of their products. So one time you will get a student loan, another time you'll get a home mortgage. As you grow, you become a real adult, you get a home mortgage, and then maybe you want to renovate that home you bought, so you get a personal loan from SoFi, and then maybe you need a car, so you get a car loan from SoFi, right? All of this, and I've done this myself. The way I became a SoFi customer is because I refinanced my Parent Plus loan after college in 2019. I refinanced that, and I became a SoFi customer because they had such great rates. And then I went and got their SoFi money. I started using the Invest app, and I eventually got a personal loan from them to rehab my house that I bought last year, thanks to all of the things that SoFi helped me do, right? So that's the system. And then they talk about how 65% and more of home loans come from their existing members. 65%. That means that 65% of their revenues in home loans, mortgages, are free. It's free money, right? Of course, plus and minus all the other stuff, but it's free money as far as marketing. They don't have to go out there and find those customers. They already have them. And because they can offer better rates now, they will get even more of these customers and then keep them in the app and then offer them more services. So it's all a virtuous cycle, which is why it's so exciting. And they break down a bunch of numbers here. We'll get to all of those in future videos. And we've covered a lot. We covered, I think, this whole deck in past videos. So you can go check our channel, bullacademy.org. Haven't done too much of this CTOs in this video, but you can go watch our videos. You'll see that. And so you see they have their lending unit, which is student loan, refinance, personal loans, home loans, and school loans. They have their technology platform, Galileo, which we've covered in previous videos. And they have the financial services. Their financial services, like I said earlier, is where they get all of their customers to come in the door, right? Most of them. They get most of their customers in the door by giving them all these like virtually free products, right? Invest, Relay to manage all your finances, money to save and spend, Protect to protect your financial health, credit cards, and now Lantern, right? So this is how they make their money. This is the beauty of it, and they're growing so fast. financial services is growing by 153% compounded annual growth rate. That's huge. And not only for itself, because remember, the flywheel says that you need to get the people in the door of the financial services. So if they're growing financial services by triple digits, that means that down the funnel, they will have more members, more customers to sell to. They will have more members to lend to, right? That's why it's so important that they build up this financial services so they can sell them loans. Yeah, diversify revenues and all that good stuff. And we can see they expect to be growing by 43% compounded annual growth rate for the next 5 years. Well, now 3 years. So that's great. A lot of great stuff. This is all before the bank charter, right? All before the bank charter. And they plan to become adjusted EBITDA profitable this year. Well, last year, 2021, Q4 is going to be reported in about 2 weeks. But this year, really, they expect to get 17% adjusted EBITDA margins, right? That is the metric that most tech companies use, right? Growth companies use to assess their performance when it comes to profits. So these are not GAAP measures, they're not actually fully profitable, but for all intents and purposes, they are profitable for adjusted EBITDA. That's what we really care about. And when it comes to growth companies, we really care about revenue growth. So they're growing revenues by 50% this year, right? And they're going to continue to do that and maintain that at 43% for the next 3 years. So all of this is amazing before the bank charter, right? And now we get to the bank charter. I'm Lincoln, and you are watching bullacademy.org. If you enjoyed this video, please do remember to like it below, subscribe to the channel, hit the notification bell, and comment your thoughts below. All of your engagement means a lot to the channel and helps us grow because YouTube's algorithm won't recommend our videos unless you engage with it. Thank you, and now let's hop in. Now we get to the bank charter, very last slide, right? Because none of this deck talks about the bank charter until we get here. The bank charter says that you see this light blue, and so the dark blue is what they projected with before the bank charter. But the light blue is what they expect to add on to their revenues with the bank charter. And it might not look like much, but when you do the actual math, it's a lot of money. It's a huge upside. It's huge. Okay, let me read some comments here so that you can see how everyone's feeling, and then we'll get to the actual numbers of this deal. And so Zach, one of our patrons, says, "Real bank, baby." Post Qatar, one of our longtime supporters, says, "Sup, Lincoln? Good day, brosk." Yes, it's a great day. It's a great night. I was not really panicking, but trying to get ready for tomorrow because I know that this is a tough time we're all in. So I was getting ready for what's going to happen this week. And for the last 3 weeks, we've been through this downturn. And so I'm trying to get my numbers right, get myself positioned to make sure that I'm not panicking if things get worse. And then this news drops, and I'm like, oh, great. Looks like I don't have to panic anymore. I don't have to do a lot of switching up. It worked out, right? I've been waiting for this news. It's going to help everyone get through these tough times because now we have some news. We haven't had news on SoFi for a long time, since December. So yes, great night for us all. Timothy says, "Yes, sir, let's go. This is just the start." Parak says, "Hey, great news." Mike then says, "The most undervalued aspect, or one of them, is the fact that SoFi is likely to offer dividend in the distant future. And maybe 5 to 8 years would be my guess." Shervin says, why is impact of bank charter so high as part of EBITDA upfront versus later? And so we're going to get into that. Good question. Very good question. Thank you for that question, Shervin. I appreciate that. Here's what we need to talk about. The numbers. This is what you guys are all here for. And I've covered this in our previous video. Like I said before, you need to go watch this video on SoFi. It was 26 minutes long, going through all of the numbers. And so we're going to go through all of that right now so that you understand what's going on, answer your questions. And if you have questions, let me know in the comments, in the live chat. I would love to hear from all of you. But definitely go watch us after this live stream. Don't leave yet. I appreciate your presence here. But I go through all of this in great detail, and there's chapters, as always, how SoFi works today, what is going to be, how it's going to be working in the future, all of that. You don't want to miss this video. Go watch it. But you're here, so let's talk about these numbers. Oh, and of course, if you're enjoying this video in this live stream. I don't do live streams often. I haven't done one in months. Then smash the like button, right? Comment and engage in live chat. Share this video with your network on Twitter so that everyone can understand the potential of this company, right? You want to help your friends, right? You don't want to leave your friends behind when it comes to investing, because if you become rich, right, and wealthy, you're not wealthy if you're the only one who is wealthy around you. It's not going to be at the top alone. So help your friends out, share our videos, and help me continue to make these videos, because if you don't share, you don't engage, YouTube won't recommend videos, and eventually I will fall off and you guys won't see me much anymore. So there's my quick pitch, and we'll get to the numbers in a second. So we have here the numbers. These numbers, what I was showing here is that SoFi is growing all of their units by double and triple digits. For 2022, they're going to go from $44 million in revenues from the financial services, which again is the top of their funnel, right? Remember, the top of the funnel is the financial services, which is mostly not the top earners of the business. They don't make the most money, right? But they make the most money contribute the most money for the company down the line, because they're the ones that get the customers in the door. So that's the bank, that's the investing, that's the banking services like checking accounts, right? And relay and all that other stuff. That gets customers in the doors. But they still make money from it. They made $44 million in 2021, or they're expecting to. And this year, they're expecting to make $195 million. That was before the bank charter. And tech platform, 226 last year. And they're going to grow that by 53% this year, on top of the 343% for financial services. Lending, they're growing that by 35% this year, from $710 million to almost $1 billion in lending this year that they expect. And then that's a total of $1.5 billion they expect to make this year. That's up 50% from 2021. That's the goal before the bank charter. Before the bank charter, up 50%, right? 31% contribution profit margins before the bank charter. 73% adjusted EBITDA margins before the bank charter, right? $254 million, up from 3% last year, right? They're going to be at 17% this year. Adjusted EBITDA profits. Their second year of being adjusted EBITDA profitable. So that's great. 43% CAGR before the bank charter. 43% CAGR is great for a growth company. It's very good, right? So it justifies the revenues to share price multiples that I and other investors give it. I say 15 to 21x, right? I think that's reasonable for this growth and the potential of this company. So I believe that all these numbers justify that before the bank charter. But then the bank charter comes in. The bank charter comes in, and SoFi is a real bank. And so the bank charter is gonna contribute 75% more revenues. At least that's the projections, right? That's what the company's very smart people and actuarians and all those other people who do risk assessments and a bunch of fancy math, who run to all the fancy schools, they say that they believe the market will give them 75% more revenues in 2022 because of the bank charter. That's what we saw here on this graph that I just showed you. That's 75% more revenues in 2022 just because of the bank charter. Then they say in 2023 they expect that to drop, of course, to 48% more. On top of this $484 million that they project to make in 2023, they expect to make $234 million more because of the bank charter. Remember, the whole point of the bank charter is to get rid of that middleman and then offer their customers better rates, better deals on their loans, right, and other financial services. So when they do that, they drop the interest rates, which means that more customers come, and then they keep more of their profits because they don't have to pay someone else. So that's how all of this works, right? And so the margins are what we're seeing here. The difference is what we're seeing here when they cut the middleman out. So then they say in 2025, they will still be at 25% more marginal revenues thanks to the bank charter. So when you see these numbers, I hope you understand my excitement, right? I hope you understand why I'm so excited about this. Not many fintechs become banks. There aren't many companies like SoFi. Robinhood's not there, right? I don't believe Square's there. Earnest isn't there. Lending Tree isn't there, but Lending Club is. They just got theirs last year. SoFi is one of the only fintechs in this space, and they are the only one-stop shop online bank that is a real bank. The only one. This is huge, right? 25% more. So Siobhan said, he said, why is the impact of the bank charter so high at the start, upfront, versus later in the later years? And as same as impact of the stock with the shorts. I'll get to that. Corey says, how does this affect crypto or their platform? Their platform though. And Square has a bank charter, I believe. I thought they had a bank charter, but I'm not sure. I haven't looked into that. But yes, they might have a bank charter. That's why they've been running up very high for the last 5 years. So, but yes, Square is a great company. I'm not trying to put them down. I just forget what their bank charter situation is. But they also aren't SoFi. They are not a one-stop shop online bank. They're trying to get there. Everyone's trying to get to that status. But SoFi is light years ahead of all of them for a good reason, because of Galileo. Galileo supports 95% of the fintech market, the online banking market. So if your online bank is, I don't know, Cash App or Robinhood or any other bank, online bank you can think of out there, 95% chance they're using Galileo, which is owned by SoFi, as 15 to 25% of SoFi's business. So no matter what you're doing out there, no matter who you're using SoFi. I had to go find this SoFi shirt before I got on this live stream, because I'm very much a passionate customer of SoFi and investor. So why is this going to impact the revenues more from the start? Because SoFi is making less money now. It's all about percentages, right? The bank charter is going to contribute. It's going to remove middleman, right? So if SoFi is making was paying the middleman 10% of their profits, they now retain that 10%. But that's a static number, right? It's not like they're going to increase the percentages that they were getting paid by that, or paying out to that bank, that middleman, the bank that was fulfilling their customers' loans, right? So that 10% is going to stay steady. But SoFi is a growth company. They're going to continue to grow their revenues over time. So today they're making 254. Tomorrow in 2023 they're making 484. They're going to continue to grow that revenue base, right? But the amount of marginal revenues that the bank charter contributes, because of the static, let's say 10% of additional profit margins from their operations, stays the same. So the number from the bank charter doesn't grow as much with the growth of the overall business's revenues growth, right? So SoFi is going to continue to grow its revenues, and the bank charter is going to continue to maintain its contributions to those revenues, right, and to those profits. So that's why you see that this little light blue bar doesn't really move too much over time. By 2024 to 2025 is pretty much a tiny bit of a contribution difference between 2024 and 2025. So it's going to stay pretty static, right? So at some point it will be a pretty small contribution to the bank, or to the entire company's revenues, but in the short term it helps the company get its footing. It helps the company get more customers, because the whole goal of this is that as a fintech, you need to get a large number of customers. You need to get millions and millions of customers in the door, and then sell them on your actual revenue producing products like lending. So if SoFi can get more customers in the door today and then keep them, then over time they can sell them multiple loans. They can sell them a loan, like I said earlier, they sell them a loan on student loans to go to school, and then on a personal loan or on a home loan to buy a house once they get out of school, and then on a personal loan to rehab their house, and then on a car loan to buy a car to get around, and then they want to buy another house. They get a notification from SoFi and say, hey, we see you have $500,000 sitting there in your bank account. Let's buy a second house. Here is a home mortgage. Here is a great interest rate. Since we're an actual bank, we can offer you very competitive interest rates, right? Better than Upstart, better than LendingTree, and better than Rocket Mortgage, or better than JP Morgan, right? We can compete with those people, those other banks now. So here's a second home mortgage. Here's another personal loan so you can rehab that house, or because you're having a baby now, right? You need to buy a bigger house for that baby and make sure that the nursery works and that you get the right tools and resources for that baby. right? Because you continue to develop your life, right, and increase your living expenses, and your family grows, right? So you're always going to need more money. You're always going to have a reason to get a loan. People like to have lifestyle inflation, right? And it's not great, but someone has to provide the resources for that. And SoFi say, hey, if you want to do that, we're gonna be here for you along the way. If you want to get a house, we're here for you. You want to go to school, we're here for you. You want to get a car, we're here for you. You want to get a personal loan so that you can build up your house, make it pretty and make it bigger, and increase your equity. We're here for you. Whatever you need, we're gonna be here for you, and we're a real bank now, so you will have protection from the FDIC with all the money sitting in your account, in your brokerage account, and all of that. The SIPC will protect you as well. We're a real bank, so you can trust us a lot more now, and whatever you need, we'll be here for you. We're part of the family now. So anything you need, when I want to get a loan, I didn't really shop around too much. I looked at other offers, but at the end of the day, it was much easier for me to just stay in the SoFi ecosystem for a personal loan. So even if I have to pay like 0.1% more, I'll take that hit just to stay in SoFi's ecosystem, because it makes my life easier, right? So if I can have all my loans in one place and just pay one bill every month, right, or have one app take my money every month, I'd rather that than trying to figure out where all my money is, right? And trying to pay JP Morgan, trying to pay Rocket Mortgage, trying to pay whoever, right? I just want to do it all in SoFi, and that's what SoFi offers. And because I'm a member, I get a discount. I believe it's 0.25 basis points on my loans because I'm a SoFi member, right? So as a SoFi member, you get perks. So this bank charter is going to continue to maintain a static or pretty static contribution to the revenues, right? Over time, it's going to shrink. It's going to be shrinking to its contribution, right? It's not going to contribute as much relatively to the rest of the revenues, but the effects of the bank charter is still there. They can still offer their customers better rates on deals. They can still maintain more of their profits, and because they can offer better deals to their customers, they get more customers because people talk. Your NPS score, your net promoter score continues to increase. That's the goal, right? The lifetime value of your customers increase because they love you. And I'm clearly an example of that, because SoFi's members, they love them. They love SoFi. So if they can keep me longer, they can sell me more loans. I've been with them since 2019. That's 3 years now, almost 3 years now. And they have members who are going to be with them forever. Maybe myself, unless something else comes along that's drastically better. But because SoFi is an actual bank now, it's pretty hard to compete with them from the start, because they already have the advantages. That's why it's so exciting. How does it affect crypto? Yes, so with crypto, because SoFi is an actual bank now, I'm not a huge fan of crypto. I'm sure you all know that by now. But SoFi does crypto. I can see why they do crypto. But the issue for crypto is that crypto is not really regulated. It's not really a regulated asset. It's very risky, very volatile. So as a fintech that's not a real bank, they could do a lot more. Like Robinhood can be very risk on, right? They can do a lot with their assets, right? And all of that cost Robinhood because they have to fulfill your order with their own money before it gets to the what's it called, the blockchain. And so that causes risk for the business. That's why you saw with Robinhood, when the GameStop squeeze was going on, they had to go raise more money because they had to put up their own money first to fulfill your orders for 2 days before your money actually takes the place of what they put up. They get their money back, and then the order is fulfilled. So dealing with all these assets costs the business money. If the crypto or the stock falls in price while they're trying to fulfill your order, that can cause them a lot of risk, right? And so the whole point here is, of course, I don't know the deep down details. There's lots of details on how all this works, but the general idea is that it's extremely risky to be dealing with crypto. So the OCC and all the regulators are going to say, hey, you're a bank now. You're a national bank. You have a duty to your customers and to your community to behave more safely, to take less risk, right? You can't be going out there playing with all the fancy toys now. You can't be in the memes, in the meme crypto coins. right? You have to have a real risk assessment team and make better decisions. You can't just be doing whatever you want anymore, right? So that's how that's how it's going to affect crypto. So they're not going to be as ahead of the game, ahead of the ball on crypto as the Robin Hoods out there. At least that's my opinion, because that's just what I would conclude from the OCC saying that, hey, you're a real bank. You can't just be doing whatever you want anymore, right? So we'll see what happens, but they've talked about this in previous earnings calls here and there. But yeah, crypto's going to be hit a little bit, but they will still be in crypto. At least I haven't heard any reasons why they wouldn't be able to do crypto. But of course, they can't be as aggressive anymore because they're a real bank, right? And with a real bank, comes real responsibilities, right? So there's your Spider-Man reference. Mike says SoFi is a growth stock that will eventually become a value stock. In my opinion, that's right. SoFi, I want to see SoFi continue to grow at 50%, 40%, 30%, right? 20% for the next decade or two. And they can do that because they're still a very small company. They're only making $1 billion this year. That's pennies. That's nothing, right? JP Morgan makes hundreds times that, right? They make so much money. So SoFi can get to that point. SoFi is, I believe JP Morgan is worth like 10 times more than SoFi. So JP Morgan is worth $447 billion. JP Morgan made $127 billion in 2021. And that was actually a decrease. So they're losing, they're not growing at all, actually. They're losing momentum. But they're making $127 billion. SoFi is only making $1 billion, sorry, making $1 billion. So SoFi has a long way to go before they become a JP Morgan. And that's great for us investors, us growth investors. I don't want to see dividends right now. I want to see them put all of their money into growth. I want to see them, because right now they're making 127 times less money, less revenues every year than JP Morgan. That's a great deal of growth upside potential for us. Imagine holding SoFi, acquiring more equity for the next decade, 2 decades, right? Well before retirement. If you're young like myself, I'm 28, you have 22 years before you're 50. And before you're 65, you have 40 years, right? So if you can hold on to this company, acquire more equity, and companies like it, you can see SoFi go from achieving $1 billion in revenues over the decades to then become something like JP Morgan with better tech, right, and owning the infrastructure company, Galileo. You can see them go from $1 billion in revenues to $100 billion in revenues over the decades. And what do you think that does for your equity that you spent all those years acquiring for the low, right? For $20, $30, $40, $50, right? That's what you do. That's how you build up the equity. It's not about how getting the stock to just go parabolic immediately like a GameStop or AMC. It's about acquiring equity, acquiring shares, so that when you get those shares at a low price, you can watch it go up, right, over time, so that you get more shares. And then as the company grows, every time it moves $1, your share of it moves $1,000, right, or $10,000, or $20,000, right? So the more shares you have for cheaper, the better. So you want to get in now when it's still cheap, or before this bank charter news drops, right? Which it did today. That's why we're all here. Get in early, acquire as many shares as you can over the long term, and then hold for the long term. That's what we preach here, the bull mentality, right? The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term. Because that's how we build wealth in this country. That's how we give ourselves the best chance of success on the stock market. And that's what you need to do if you want to build long-term sustainable wealth that's going to enable you to retire on your terms. And that's the beauty of getting in on SoFi. Now, when the bank charter news is still not propagating, because we saw what happened with Lending Club. When Lending Club got their bank charter, it took, I believe, 3 quarters before the market really caught on to the fact that they had their bank charter. And so the stock went up faster after the market realized it. So we go to Lending Club. We can see right here, they got the bank charter sometime in early 2021. And the stock was pretty, it went up a little bit, and then it was pretty flat for a little bit. And then people really caught on, because what happened was after multiple quarters, they started to show on the earnings. because it's not going to show immediately. So SoFi's going to have their earnings. I think it's in February or March, but that's going to be Q4. So you won't see any of this reflected in the Q4 earnings from 2021. You probably won't see it reflected too much in Q1 of 2022 because they just got their bank charter. They have to put in their strategy. They have to get the team built, right? Get everything in place. So it's going to take time. You might not even see it in Q3, but by Q4 we'll start to see the effects of it in the earnings, in the revenues, in the margins, right? And then the market will say, "Oh wow, it's working. Why is this working? Oh, they got a bank charter in January. That's why we're seeing all this growth in their revenues and their margins." So you still have time to buy this stock at a pretty low price before it goes up, right? And we've seen that with if Square, I believe Square has a bank charter. Yeah, so they have a bank charter. They began in March 2021. So if we look at Square stock, we can see a similar trend. So Square's been growing for a long time. So the trend's not as clear, and of course people say they've been overpriced. So that's why we're seeing this drop now. But they have this is how they've been growing. And of course, people have been very excited about them over the last year or two. So it's not going to be immediate. You're not going to see the stock just shoot up much more than it already has. We saw it's up by 15%, 16% actually since I last checked. So that was a big jump, right? But it might go down a little bit. So you still have time to buy more. I'm hoping that it stays around $16 per share for the rest of the first half of this year, so I can buy more shares up, right? And then once it starts to show in the numbers, in the earnings, then we can actually get the benefits of it. So that's really why I'm so excited about SoFi stock. And yeah, this is such great news. So let's just read some tweets real quick, and then I'll get to more comments, and then we'll conclude here. But they say, by embracing innovation and bridging technology and financial services, we can promote inclusion and be there for our members for every major financial moment in their lives and all of the moments in between. Anthony Noto. That's right. That's what I explained to you earlier. They get in the door, student loans. That's how I found SoFi. Student loans. Then they say, hey, you want a mortgage? Because now you're a grown person, you should get a house. Here's a home mortgage. Do you want a personal loan so you can rehab that house, make it look better and more comfortable for your family? Here it is. Got your first baby? Here's a personal loan so that you can make the house more comfortable for the baby. Are you trying to buy a second house? There's another home mortgage, right? So they're going to be there for their customers. And now that they're a real bank, they can offer them better rates. And that's the beauty of SoFi. I could say this all night, but you guys get the point by now. I will do more videos on this. And yeah, we'll talk about this more. Corey Lee says, and I appreciate this, Corey. I appreciate all your support, everyone here. He says, really hope your channel continues to grow. Your content is easy to consume, and it's obvious how passionate plus knowledgeable you are in this area. I appreciate that. It means a lot to me. And Corey also says, SoFi helped me consolidate $20,000 in credit cards and helped me climb out of a hole that nearly buried me. There's a real customer talking about how SoFi impacted his life, right? From credit cards to other debts, right? So they're the only one-stop shop online bank. That's the value here. That's why it's exciting that they're a real bank now. If this was some other online bank that only does lending, like Lending Club, or some other online bank that only does checking accounts, or like investing, it wouldn't be a huge deal because they don't have the flywheel, right? They don't have the value of the flywheel. The flywheel is a huge deal. So we can look at this. They actually break it down for us. This is how they get their customers up here. And then this is where they make their money, down here. So the more customers they get in the door up here, the more money they make down here. It's very simple, right? And it's just a virtuous cycle. 65% of their home mortgages was free revenues. And it's gonna be increasingly free, increasingly cheaper revenues over time. And the bank charter only makes that easier because of better rates, better customer service, right? That's how Amazon became how big it is, right? I'm not saying SoFi is the next Amazon, but that's the playbook. You serve the customer. And when you serve the customer best, they tell their friends, and they stay with you longer. And then you offer them more services over time. You do more, you iterate, right? You make their life easier at all of the different points. And they stick with you, they become loyal to you. And now as a real bank, they can do that even easier than anyone else, right? This is the flywheel. This is why we're excited, because all of this, cheap, and then this is where they make their money. Home loans, student loans, right? Credit cards, personal loans. I'm excited. I'm very excited. Let me switch to myself so you can see my face, see my excitement. You can see how excited I am. I have the strobe lights on the back. I don't use that in our videos often. I got my SoFi shirt on, right? Ambition is my fuel, and I get great mileage, right? SoFi gets you great mileage because they're there with you at every step of the road. Yeah, it's gonna be a good year. Of course, we have a lot of other influences in the market right now. We have the Federal Reserve and their interest rates. We have the inflation. We have the COVID. We have the supply chain. We have all the influences. So there's no telling what's going to happen this year, right? But you need to understand that when you focus on the short term, you have no control. But when you focus on the long term, right, you get the benefit of the short term and the long term upside, and you don't have to panic. So if you see SoFi go down tomorrow or next month or next quarter, whatever, you can say, hey, I wasn't focused on that. I'm focused on the long term. And thanks for selling the stocks. Thanks for the discount. So when SoFi was down, I was buying more shares. I told you guys that. Whenever SoFi was down, I buy more. I buy more. And I buy more. And I build up my equity. Right? Cheap equity. That's the goal. Acquire cheap equity. Hold on for the long term. Build your nest egg. And then as the stock grows over the long term, you benefit from the appreciation of the value of this asset. It's pretty simple. It's the simplest playbook out there. That's what Warren Buffett did, right? That's what Mark Cuban did. That's what whoever you want to name did. And that's what good businesses do. They invest for the long term, right? They build today. They put all of their money into growth, into serving their customers in the short term. And people look down on them and say, why are they making any money? Why are they losing all that money? Why are they unprofitable? And then in the long term, we see them go become a $1 trillion company, become a $3 trillion company, right? So we look at Amazon, right? At some point, it was way down, right? And Google and Facebook, and the story is the same. You invest today with the long term in mind, and in the short term, it might not look good for you. Right? It might be tough. There will be times when it hurts, right? Tesla, same thing. I bought Tesla at $38 per share, right? That's when I bought Tesla. Everyone was saying it's gonna fail. Elon Musk was even saying, hey, we might go bankrupt, right? Because we're so aggressive with our growth strategy. So I looked at the numbers and I said, hey, everyone else, the people with the money, they're throwing all their money into Tesla. There's a very little chance that they're gonna let Tesla fail at this point when they're just about to take off. So I saw the stock go down. I bought it, $38 per share, and then I 14x my money in less than a year, right? And at this point, I'm thinking, okay, so I don't see the potential here anymore. But that's just me. I'm not huge on Tesla, but they're obviously doing a lot better now. That's 25x, almost 26x. Because they spent all this time here investing for the long term. All this time with the long term in mind. So that's how I invest. This is what I was showing you. I bought Tesla at $38 per share on May 24th. $38. That's where I bought Tesla. That's what I was just explaining. So I bought Tesla when it was here. And then less than a year later, it was all the way up here. And I benefited greatly from that investment. And so did Tesla. They were here and went up. So that's what I was saying there. Same thing for Amazon. We've seen over and over again. The playbook is invest in the short term for the long term. Invest in the short term for the long term. And in the long term, you get a benefit from the appreciation of the value of the asset. That's it. That's the whole playbook. You invest in the short term. You serve your customers. You get more customers. You retain customers. You serve them better. You give them more services. You offer them more. And in the long term, they stay with you. And you get to sell them more stuff and better stuff in the future. That's what SoFi is doing right now. They've been investing in their services, in helping their customers succeed, and now they're benefiting from it. And they're going to eventually benefit even more now with the bank charter. Justin Sanchez says, thought it was a falling knife. I was afraid it might go to 11. So I was getting my plan ready for how I'm going to handle that, how I'm going to deal with that, right? And I'm going to buy more. But then this news came out and it just shot up 16%. Yeah, it's been falling very, very sharply for the last year. 35% down in last year, 26% in the last 3 months, down 5% in last month, right? But tonight is up 16%, 17%. So we gotta someone out there heard us crying and say, here's some cookies, eat up. Ooh, I'm sorry. Dare said, I'm pissed. I sold my 55,000 shares at $12.35 today. Ouch. Oh, Melanie said that too. Melanie said ouch too. I'm sorry about that, Dare. That is very rough. That's why I said you have to focus on the long term. The long term is where you make the money. The short term is where you can lose it if you panic, right? And that's what we see all the time. And people lose money is because they panicked, because they had a short term plan. That plan didn't go well, and so they had no option but to abort, right? But to cut their losses. And so you cut your losses, and then you might miss out because you can't time the market, right? Because time in the market beats time in the market, right? That's the old adage, right? So I'm sorry that happened to you, or I'm sorry that you made that choice there, but you live and you learn, right? It happens to all the best of us. I sold QuantumScape right before it went up to $100. I sold it at around like $20 or something like that, and then the next week it went up to $100. It happens, right? That's just life, because I didn't really believe in it for the long term. And Mike Codman says, I wonder how long it took Ally to offer a dividend. Does Ally offer dividends already? Wow, okay, Ally Bank. I forgot they were public. I was thinking of, who was that? Vero. Vero's not public yet, they're still private. Ally is worth $18 billion. I don't know why they would offer a dividend at $18 billion in market cap. They have so much growth left. They haven't even crossed $100 billion. Why are they offering dividends? That's why I'm looking for growth. I'm not looking for a company to just accept okay and mediocre. I don't want mediocre. I'm looking for growth. Dividend. Yeah, they're offering dividends already. I don't like that. Dividends are for companies that are established, companies that aren't growing anymore. If your growth company starts to offer dividends, it's not a growth company anymore, right? Unless they're one of the top companies out there like Microsoft or Apple or Amazon or Google. Well, Google and Amazon offer dividends because they're not dumb. They're still growing. They believe they can still grow. So when your company is offering dividends, that just means they're using less money to build a company, to build more products, to serve more customers. Because they're giving you the money that's being taxed by the government, and then you give it back to them in the dividend growth investment. I've explained all of this in many previous videos, and I'll actually show you those videos now, so you can go see why I'm so against dividends. So yeah, if your company is paying you dividends, you must be someone who's ready to retire, or you're just filthy rich already, and you don't need more growth in your portfolio because you've made it, right? Dividend stocks keep you poor. I've talked about that, right? Dividends are not good if you're poor. If you're not rich, if you're not ready to retire, you don't want dividends. They're not good. So I don't want to see SoFi giving out dividends. I really hope they don't. Jeremy says it's probably gonna cash back down to 13 with all the FUD in the market. Yeah, I agree. There's lots of fear in the market right now for many reasons, but you just take advantage of it. Whenever I see these stocks go down, my high conviction plays, I just buy, right? That's how I do it. I wanted to find you one more dividend video actually. So diversification dividend stocks, I don't like. I make that very clear on this channel. They don't make sense for growth. There's no argument to be over diversifying or investing in dividends. Dividends are not a smart strategy if you're poor. There's just no argument that could convince me or anyone like Warren Buffett to say it's a good idea. Anyone who's telling you that dividends are a good idea on YouTube, I would really question them. If you're middle class, if you're not ready to retire and you're getting dividends, bad idea. Jeremy also says, how does their technology really make them superior to Ally or any other bank? Go watch our video on SoFi will be everywhere. That is, I believe, our top SoFi video and the top video on SoFi, if I must say so myself. Watch this video. SoFi will be everywhere. Then you understand why SoFi technology advantage is so far greater than everyone else. Because if you're using all these banks out there, all these neo banks, all these online banks, you're using SoFi. If you're a customer of an online bank, 95% chance, no matter where you are in the world, you're using SoFi's technology, Galileo. That was Anthony Noto's move. That's why I trust that man so much with my investment, because he's very smart. He said, I want to own the manufacturing plant. If there's a bunch of hot dog stands around, I want to own the closest and all hot dog stands around. So no matter what my hot dog stand does or what their hot dog stand does, I'm getting paid. And I get to set the pace of innovation. So Galileo is a big deal. So yes, Jeremy, that's why technology is better and gives me better advantage. It's superior. Galileo is a huge deal. Whenever I see a bearish article on SoFi, the first thing I do is do Command F and look for Galileo. And if I don't see Galileo in that article, I'll skim it. I'll see what they're trying to say. But at the end of the day, if you don't talk about Galileo and you're talking about how bad SoFi is, you don't know the company, right? Galileo is huge. It's a huge deal. How did I get a SoFi shirt, Mike? I got this in 2019 because I became a customer, and SoFi makes their customers happy. So they sent me this shirt in my SoFi home. I got their SoFi credit card. I got their SoFi debit card. I got SoFi personal loan. I got SoFi student loan. So yeah, I got all the SoFi stuff. How long have you been a software engineer? Oh, I forget I was still up there. I've been a software engineer since 2017. I guess I should do a video on who I am. But yeah, I've been a software engineer since 2017. The profession, like full time. I studied computer science in school from 2013 onward. 2014, I guess that's what my major. That's why I understand the beauty of stuff like companies like Galileo and Cloudflare, NET, right? That's why I'm so heavy in these companies, because the infrastructure is what makes these companies special. And SO says, yeah, I've been doing DevOps for 10 years. Man, I admire that, because I am not really I'm not really passionate about DevOps. It's very complicated stuff. I just like to build things and then let somebody else deploy for me, get it out there into the world. But I do my own DevOps, my own projects like this one, ministories.com. So this is using Cloudflare technology, right? This uses Cloudflare. And if I want to offer payments, I could use Galileo to offer credit cards to my merchants in my marketplace and all that stuff. So there's lots of uses for Galileo, but most of their current product is serving neobanks, right? And helping them do their business. So Robinhood uses Galileo. It's the API standard for card issuing and digital banking. Our powerful payment processing platform offers the easiest way to create sophisticated payment card programs and digital banking solutions. That's right. Dave, MoneyLion, Monzo, SoFi, Eula, and Wise, TransferWise. These are public companies that use Galileo. Robinhood is also on this list. Chime's on this list. Who else is on it? So many of them are on this list, right? So this is what Galileo is, and you need to go check it out. You understand what this is all about. Thank you all for being here. I know it was a long one, and I just wanted to get it out. I hopped off work immediately when I got the news, and then my girlfriend asked me if she could do a dance party because we have these strobe lights here. And I told her if I needed to do a video, so I was gonna kick her out soon. But so I appreciate her letting me come in my office and do a live stream for all of us to celebrate this big news. It's huge. I'm really excited. I know it's going to take some time to really reflect in the share price in the business's bottom line, but once we get to that point, SoFi will be benefiting a lot, and so will the customers. So that's why I'm so excited about all of this. So I would love to hear from all of you more, and if you would like to engage with me more outside of YouTube, you can join us over at patreon.bullacademy.org. Our patrons support this channel financially and help me do these videos, right? Help me create these videos. They're the ones who told me about this news, right? As soon as the news dropped, one of our patrons shared it with us as soon as it came out, right here and so as soon as he put that up there, I went in and bought more SoFi. I bought 1,000 more shares of SoFi before it got to $13 per share, before it went up, right? In after hours. So thanks to him, I was able to get in before all of the people, because I was planning on getting more shares this week and next week. But because he told me about this, the news, I was able to get in as soon as he told me. Right, and we all saw that, and we were able to get in if we wanted to. And then Elliot told us about it being official, because at this point I thought it was still only conditional. But then when Elliot showed us this tweet by SoFi, then it became official, because now they're saying, hey, the OCC says conditional. That's because they have to do their legalese talking, all that. Conditional is their legal term, but it's official, right? We're ready. We're a bank now. We're a real bank. So when that came out, because I was talking about how I was gonna buy more and all of that, it's just crazy how it came out tonight, because we've been waiting for so long. We thought it was gonna come in December, and didn't come, and then now we're hoping that will come in Q1 of 2022, and they came out tonight out of nowhere, right? So I'm excited. I'm still excited. And if you would like to be a part of our community that we're building here, we talk about investing in the stock market every day, share news, rumors, and new investment ideas together. Mike says one video subject to cover is SoFi CEO Anthony Noto himself. I agree. I want to do a video on Anthony Noto. He's very impressive, very inspiring. Whenever I hear him talk, I want to buy more shares. So it's a little dangerous to watch too many of his videos, too many of his interviews, because he's very convincing, right? If you listen to this guy talk about SoFi and his history, you'll want to buy a bunch of shares of SoFi. And I've done that, right? I've listened to him talk about Galileo and all the other stuff. And I'm like, okay, let me buy 1,000 more shares. It's cheap. Why not? Goldman Sachs, Twitter, NFL, right? He's the one who brokered the deal to buy the SoFi Stadium, right? SoFi Stadium is the new stadium that's going to host the Olympics, the NFL Super Bowl, college basketball championships, all the other things, because of Anthony Noto. Because he worked at the NFL, he was able to get in on this new stadium that is going to be the center of entertainment, right? BTS was just there. The South Korean boy band was just there. K-pop. They got the Chargers and the Rams as their NFL teams, right? So this is a huge deal. They're becoming a cultural name, a household name. So all this stuff is his doing, right? He's really a special leader. So that's part of the reason that we're so bullish. You gotta trust your membership, your leadership. If you don't have a good leadership, you're in trouble, right? So that's what Anthony Noto brings, and he brings great people with him. When he left Twitter, he brought along Michelle Gill, the business lead, right? The group business lead in lending, and lending is the biggest business. So he brought on this lady from TPG and Goldman Sachs, who he worked with at Goldman Sachs, so that they could build up the lending department and get it back on track, right? So that's the value of a great CEO. And of course, this is Galileo's CEO and founder, Clay Wilkes. A great team they have here. Of course, I would like to see more people who look like me, but I like to see that everywhere. But that's apparently too much to ask for. Anyway, higher analyst price targets. Oh, I didn't even talk about analyst price targets, right? There's so much to talk about here. Let's take a quick peek at the analyst price target. So yeah, this is their price targets. $28 high, 99% upside, median of $20 per share. That's a 42% upside, a low of $16 per share. So this is 12 months out, right? So 40% upside at the lowest is the analyst price targets. So there's lots of upside left, even at these prices right here, even at $16 per share. So yeah, I agree. And Jermaine Pryor says there's gonna be more higher price targets coming soon. So I agree. And that's it for now. I can go on forever, but I do need to hop off. I appreciate you all being here. I hope you enjoyed it. If you did, before you leave, do not forget to hit that like button, because if this video doesn't do well, then YouTube won't recommend it. I need you to feed me with energy and engagement. So please do. And I really, again, hope you will join us over at patreon.bullacademy.org to support the channel financially and help us create more higher quality videos for all of us to learn how to invest in the history of these companies that we're all invested in for the long term. That's it for now. I'm Lincoln with bullacademy.org. Thank you again, and I hope you have a great day. And while you're still here, I do hope that you will go to our channel, bullacademy.org, and check out our videos. We have a bunch of videos on the psychology and philosophy of investing for the long term, my own portfolio reviews, breaking down how I invest, the fundamentals of investing, the basics, right? Stocks, warrants. We have top videos on warrants, explaining that, how that works, SPACs, all of that, Tattoo Chef, and so many other companies. So there's a lot to learn, a lot of watch on bullacademy.org. Go check it out. We just hit 8,000 subscribers this month, last week. So thank you all for all of your support. And I don't know when I'm gonna do a live stream next, but I hope that you will join me next time. And I hope you will continue to watch these videos and engage and help us continue to make these videos. Thank you again. I'm Lincoln with bullacademy.org. Thank you and have a great day.